Hello everyone, welcome to the World Wealth Wise. Let's discuss today one simple yet important concept of unbilled revenue, and also we will going to see what is the difference between unbilled revenue versus deferred revenue. So first start with unbilled revenue. Unbilled revenue, also known as accrued revenue, represents income earned by a company but not yet invoiced to the clients. Okay, means work done but invoice has not been generated yet. So it's a very simple concept. There is no any ambiguity that you have provided or completed your services or delivered the goods but you have not invoiced yet. And causes, in which situation this unbilled revenue will going to happen. If there is a difference in billing cycle, suppose we bill quarterly and we have to represent to our management books monthly. Like in the US, we have to prepare the books on monthly basis. Here in India, we prepare on annual basis, quarterly, half yearly, as per the requirements. But this unbilled revenue, why it is so important? Because you have to take the effect of all the revenue, whatever you have earned up till the cutoff date, up till the period that you are finalizing your books. You have to consider this revenue into your book so that books will represent the accurate picture. So wherever the billing cycles are different, like billing cycles are quarterly and we are preparing financials on monthly basis or doing accounting on monthly basis, then we have to recognize that revenue as an unbilled revenue. Basically it's an asset. It will reflect on the asset side first. Then after generating a correct invoice or full invoice or proper invoice, or then that will reclassify to the account receivable. Okay, let's proceed. So I was talking about the situations when this can arise. Suppose if I'll take an example of photographer. Suppose you are a photographer, you have done a photography into the wedding for the December, okay, but you have not invoiced yet. You will going to invoice in the January month. So this kind of situations will be uh, covering here. And then there is suppose one time charges in most of the IT companies, you can say they have to do some integration part for their clients or their customers at initial stage, and that might get delay sometimes in order to raise the invoice because they wait for the full deployment kind of things. But still you have done the work, then you are eligible to invoice. Means you have to take that revenue into the your books. And project milestones can be one reason sometimes. If you do invoicing after achieving certain milestones, in that case also this can arise that you have to take care of or track the unbilled revenue. So let's understand tracking of unbilled revenue, why it matters. First, the revenue recognition should be on correct time into your books. You know, if your books has to be prepared as per the IFRS, then you have to follow that. And here in India, we have to follow uh, the companies on which the Indias is applicable. Then they have to follow the Indias 115 for the revenue recognition. So in that we usually IFRS and Indias is mostly the same thing. In that we follow the five-step model. First, you have to identify the contract. Then you have to determine the performance obligation, then determine the transaction price, and then allocate the transaction price towards the performance obligation. And then finally you have to decide, like you have to book the revenue at one shot or over the period of time. In over the period of time also there is a sub conditions also, like three conditions are also there. So let's not go into that right now. I'm just giving you the overview, like for the revenue recognition, which kinds of things are applicable here in India and internationally. And in us they follow the US gap. Okay, they don't follow the IFRS. And then the second, the important reason could be preventing revenue leakage. You know how you will going to prevent this? Let me tell you. Because if you're tracking your unbilled revenue, then you are very sure and you are like able to represent your management also that hey, we are tracking the revenue as well, ensuring all earned income is captured and accounted for to prevent missed invoices. Okay, you know, if you recorded something as an unbilled revenue, then there will be or would be obligation, like you have to raise the invoice at the proper time, you know. And then the cash flow management is also the one of the criteria, you can say. So this all are the things, like why unbilled revenue should be recorded into the books. Then let's talk about the difference. Unbilled revenue versus deferred revenue. Unbilled revenue, as I told you, like income earned but not yet invoiced, and it is an asset on the balance sheet, represents work completed. In simple terms, you know, I'm just making things very simpler here so that anybody can understand. So deferred revenue on the other hand, it's money received for goods or services not yet delivered, right? A liability on the balance sheet and represents work yet to be performed. Okay, let's talk about our final slide, like accounting for unbilled revenue. As I said, identify unbilled revenue, recognize all revenue from completed or ongoing projects, not yet invoiced, record it as an asset, and then finally reclassify the amount previously recorded as unbilled revenue to accounts receivable as invoices are generated. So thank you guys. That's all for today. This was very short and simple concept that I was wanted to discuss. Thank you. If you like the content, please like this video as well. Share it as much you can and comment as well. Thank you.